are prepared to break the silence. I'll be out in the sunshine, running beside the lion. I've been feeling down, but I've been looking up.
Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. In today's video, we talk about a synthetic VFX trading strategy that will stop losses that all traders ignore. Before I continue, if this is your first time visiting this channel, try your best to subscribe and turn on the bell notifications so you get notified each time I upload a new content. Try to refer, try to like and comment so that YouTube will be precious to a high level of audience. Make sure you stay to the end of the video so that you will get a kind of direction and motivation. And don't forget to join our VIP signals, groups, and courses, forex synthetic courses, to actually deliver you from where you are that is very lossy to a profitable zone. Okay, it takes a strong hand. You need to be mentored, you need to be lifted by strong hands before you start on your own. Okay, that's by the way I will take you to the chart. Here we shall be using the least soon level. This topic, inside this topic, I will bring in the notion of price action model and the notion of device scheme boundary conditions that affect price action reversibility and continuity. Get your pen down to be writing things because I didn't write much script. Okay, I will take you to the price action model so that you will flow with me. Now this is a price action model. Actually, this model was included in MO5 drop course. I don't know if most of you know what MO5 drop course is. MO5 drop course is a course that will teach you how to take $1 to $6,000. Only trading step index multiplier market. I get it. So this is a price action model. We have a price axis, the vertical axis greater than 0. That is, price cannot be negative. And then we have the time axis greater than 0. That is, time cannot be negative. We deal with a first quadrant problem. In a forex synthetic market, in any financial market, we are solving first quadrant problems. This is the block model, and we also have the this is the graphical model. We also have the block model. This is an infinity origin. This is V or inverted V. That the signal from V or inverted V is fed into the RC test. The RC test, if there is a successful, like if the test it depends if it proves to be continuous, and then it has to go into the breaking mode. But if it proves to be reversible, it goes back to the V or inverted V pattern. Then it continues. It moves in a circle, and the anything that moves in a circle is going to be repeating history. Okay, so this is the graphical model. This node is called junction. Inside this node, a lot of price action is happening. Inside this node, ranges consolidation that will be slow price action, that will be reduced momentum, reduced energies in the changes in price. Here is made up of ranges, consolidations, small movement, compressions. That's what you see inside this node. Then we have another type of range where the market is tend to create a new node. So if there is the distance between first two nodes created by price action moving in the given direction is called range. So now after the first two nodes, and there is a successful breakout, like a successful breakout out of the second node, a third node will be created. This third node we we create what like is now adding to the trending nature of the market. Like it makes the price action to become a trend, because there is now three nodes. Once a trend is made up of at least three nodes, are you getting it? The middle node is a node that has been broken, and then the market trend. Because for market to trend, it will create higher highs or lower lows. If it is uptrend, higher highs. If it is downtrend, lower lows. Are you getting it? So this is the graphical model. Why we say infinite or infinite origin, it means that price can take on any value. Price can reach the time axis and break the time axis, push the time axis up, and then create a new range, create a new a new boundaries, like model, like a new fixed boundary prices, like two prices where the market will play around. I get it. So that's what I have to explain here. So let me take you back. At least you need this model to understand what I'm saying here. Let me take you back to the main charts. So I'm trying to look at the boundary, the screen boundary condition problem at all the time frame. This is a big problem at all time frames. It's a big problem because the RC test or the RC block have to come into play. You know what I mean by RC block? RC block means reversibility or continuity block. Now, if when you are here, you'll be like, this is the end of the screen, and therefore the price will change. This is the least zone level, remember? So this is the end of the screen, the price will change. That's what will come your mind, because you will say the price has have reached the end of the world. This is where the earth ends, so it will reverse, isn't it? Now, look at how the price action model will solve this problem. See the boundary, the screen boundaries. That is the top of the screen and the bottom of the screen. See it as a node. Also the price axis, the right axis, which is the vertical axis, see it as a moving axis also, because the price progresses from left to right, and as it is moving, you discover that the right axis is also moving to accommodate new prices, like new values that the price is taking on. Are you getting it? So in other words, we can also see the right axis as a node where RC behavior will take place. So each time you notice that the price have reacted at the zone level, no matter what the time frame is, be it M1, be it higher time frames, or let's say much more higher time frame like monthly. Once price is reacting to this screen, like I will actually focus majorly on the top and bottom screen boundaries. Okay, so the right vertical axis is not an issue. Like what I mean, this right vertical axis is not much issue, because price moves up and down and not actually horizontally. Okay, so now once price react to this top or bottom boundaries of your screen, what you need to do is to carry out a test. Are you getting it? You run RC test to confirm if it will create a moving axis. This axis is going to be time axis. If this horizontal axis will move, because this is where the time axis is located. We can actually project it to any other higher level, so it can be here. So there is probability that when price hit here, it will start, the time axis will start moving, and new prices will get. Instead of seeing a maximum of 560,734.98, you can be seeing five it can be seeing 600,000 plus. How does it happen? This axis start moving, then this price at the screen boundary, like the current screen boundary as you're looking at it, the top screen boundary as you're looking at it, this price will come back and stay somewhere here. At a point it will even reach here. You will be seeing those prices near here. Why this top level take higher new values, so when such thing happens, it means that continuity has taken place. There is continuity in the price action, which happen when the axis start moving up, like near the stop start moving up. It shows that this node, this top of the screen, is a kind of resistance that has become a support. Are you getting it? So each time price reacts to the screen boundaries, the top or bottom, carry out RC tests. You need to use, I think, band theory. You zone, you create a zone with some width. Make sure the width is enough to give you a proper test. Like you create a zone, when you create a zone, depending how price play with that zone, if price goes up, like if the price is moving up, like this is uptrend. If the price break it and goes up and retest, then it's going up. But if the price break it, like if the price couldn't break it and keep reversing and start creating lower lows, you will definitely know that this market is changing direction. So some people keep blowing their account near this node, this top and bottom node. They keep blowing their account. They think that if market is buying, it will keep buying, not knowing that this node, the brokers use it to kill a lot of traders. See what happened? This market sold here. If you are buying near here, you won't make it. It's selling. Based on the V model, it's trying to form V. Are you getting it? And it's still selling up to today. Okay, so it's not easy to actually succeed in trading financial market when you have not had experience. You need someone with experience to succeed. Join our VIP. Even though this market is selling, it's not everywhere you can sell. You see, we bought here, we can't sell here. There are a lot of variables, there are a lot of confusions that is making people to lose. It's so simple the market is, so simple you can make money, yet if you don't have what it takes, that simplicity will become 10 times, 1,000 times, millions of times complexity that will make you blow your account from time to time. Thank you. Bye for now.
You've got it if you're prepared to break the silence.